And I would now like to introduce the first session of the summit, Leveraging Fiscal Stability for Acceleration of Growth. Moderating the session will be Mr. Murtaza Jafferji, Chairman of the Advocata Institute. Mr. Jafferji, I invite you to take over.
Thank you. May I reiterate about the Slido platform? So there is a QR code on your table. You got to take the camera app on your phone, point it at that, then you get a link and then you register yourself. So if you want to put any questions, please come through that. And I will have access to the questions, so it will get ranked. And how today's session will work is that for once we are starting on time. So it's 2 hours. There will be 4 rounds of prepared questions. Each panelist is given 5 minutes to answer each question. We have 3 physical panelists here, and Fariz, who's coming through virtually representing the World Bank. Originally, we had 1 other panelist from the IMF, but due to a personal emergency, she's unable to be with us. So we increased the number of rounds to 4, and then the last round is for the audience. So ideally, we would like to have 1 question for each panelist, but if we don't get that 1 question per panelist, we will have reserved questions. I think we can entertain more than 1 round for the audience, so please make your questions brief. Let me give you a very brief introduction to the session. For 10 years, after the end of the civil conflict, Sri Lanka was vulnerable because our growth was based on what was called factor accumulation and not due to productivity. We employed a lot of people, especially in the public sector, and we mobilized a lot of funding from overseas, which funded the growth. There was a large growth spurt in 2010, 11, 12, because we were rebounding from a very low base. But then the growth started slowing down, and we started mobilizing more capital to try to keep the growth going. We had multiple crises on the currency in 2012, and once again around about 2016, because we started continuing to run out of foreign exchange. Then we had these disastrous tax cuts in 2019, and the policymakers at that time when COVID hit were trying to manage the crisis as a liquidity crisis, when it was very clear that there was a solvency crisis, because in 2020, we were being warned that our rating was going to be revised downwards. The moment that we lost access to the financial markets, it was almost impossible to roll over our foreign debt. And therefore, we did a mistake by using our reserves to keep on funding our foreign debt. We had administered prices, especially the exchange rate, and we kept interest rates artificially low. And then in the roundabout April 2022, when we ran out of foreign exchange, we had to revert our policies, and there was a big economic contraction, and the rest, of course, you know. So now we are in our 17th IMF program, and we, like a good doctor, they are administering very painful medicine, and the IMF is here on our invitation. They are not imposing anything on us. They're simply saying what is good for us. So we are on the path to recovery. The macro is about stabilizing the economy, and the second part is growth. So most of the questions are related to the macro and the stabilization of the growth. So let me start by first asking ST a number of questions related to the revenue side. Most of these people are businessmen, and this is going to be a pertinent issue. As per the budget, the revenue is supposed to increase by 45% and the tax revenue by 47%. This is an extremely tall order. There are 3 levers: tax policy, administration, and buoyancy through growth. Can you elaborate more specifics of how each of these are going to contribute for you to achieve this 47% growth in tax revenue?
Good morning. Thank you, Murtaza. Thank you, CCC, for inviting me to take part in this very important discussion. Yes, you're very right, because we are now under an IMF program, it was us who went to the IMF, and now we have to, basically work along with some of the, parameters, contours that we have been, agreed upon with the IMF. So one of the key areas is the revenue generation. If you see Sri Lanka's history, maybe last 20, 30 years, revenue was relatively okay. In fact, there were times where it was about sometimes 22% of GDP, and it came down over the years due to various reasons. Now, as you mentioned, it's very low. In fact, one of the lowest in the world. It was around 8% last year, and this year it will be around a little more than 9%. But under the IMF program, we have a sort of commitment to increase our revenue to GDP ratio next year to about 12% of GDP. So going from 8% to 12% is a necessity, and we have to do that. And it's a very difficult task, as you already know, due to various reasons, as I mentioned earlier, exemptions and low coverage sometimes, most of the times, and issues in the tax base. All these, and also weaknesses in the tax administration, all have contributed to this lower level of revenue. So why we basically emphasize that we need to improve the revenue is that, due to the debt standstill that was announced last year, April, we are getting very limited amount of foreign financing until we complete our debt restructuring process. And at the same time, domestically, there are limitations to borrow from the markets. There are consequences as well. But more importantly, we are no longer sort of eligible to get the central bank financing to finance the budget. Under the new Central Bank of Sri Lanka Act, it has now been terminated. So the only way to undertake fiscal operations in the country is to get the revenue increase, whatever difficult it is. So that's the sort of commitment, and it's a must. If we are to basically go ahead as a country, we should make every effort to get our revenue increased. So how we basically get this, how we are planning to get this increase is a very important question. For the moment, if you see the tax structure, there are at least 4 key taxes: personal income taxes, corporate taxes, VAT, and excess taxes on alcohol, tobacco, and fuel. Those are the main taxes. But the issue, what we see is that, how you get the expected yield out of these, key taxes. There are some other taxes as well. So that's the issue. And recently we have introduced some other changes to value-added tax. Basically, widen the VAT base by removing exemptions, and also there will be increase in the VAT rate as well. Broadly, those are the sort of policies that are to be implemented in the journey towards getting this expected revenue. But more importantly, we have recently removed all the import restrictions except personal motor vehicles. That will also contribute to us. And then the recovery of the economy. We are expecting, though we had a serious contraction last year, and it will be lower this year, around maybe 3%, but next year we are expecting growth to come to the positive territory. So that will also help. And then the full impact of the tax reforms that we have been implementing from last year onwards, and also this year, would be seen in 2024. So altogether, we expect that we would basically be able to get this revenue as we are envisaged. And then the key part is the tax administration side. As I mentioned earlier, there are a lot of weaknesses in the tax administration due to various reasons. So the government focus now is on enhancing tax administration, compliance, and digitization. In fact, we should understand that Sri Lanka's tax administration structure is saddled with deep, long-standing legacy issues. These are very, very, long-standing legacy issues. If you see the RAMI system, we have been trying to implement it, I think, since 2013. We have still not been able to, fully implement that RAMI system, basically to digitalize the tax administration in the country. And these constraints cannot be resolved overnight, but we have to start somewhere. So that's why, at present, a comprehensive effort to improve tax administration and compliance reform is ongoing. Mainly, as I mentioned, digitalization. We'll be making a lot of efforts to improve the digitalization, and then information sharing with the tax authorities as well as other relevant institutions, and collection of tax arrears. You would have seen in the media, and many claim that there are sort of tax arrears, a significant amount, but what we have seen is that about 80% of these uncollected taxes are due to legal disputes. So it will take some time, but there are about at least 20-25% that taxes that can be collected. So we are very closely monitoring, and we have very specifically informed the relevant department to basically take whatever the possible action to collect these arrears, and then on-time filing also are being promoted. And it's a combination of policy as well as the administration. And I have to re-emphasize the fact that it is tax administration that would generate the expected revenue. And this is not a sort of single effort. We are getting a lot of support particularly from the international organizations, IMF, World Bank, and the ADB. Three agencies are, in fact, very closely working with us in terms of digitalization, in terms of tax policy, as well as administration measures. And also, I'm happy to say that there's a resident sort of advisor also there in the internal department to help us from the IMF to achieve this target. So all these things we are hopeful would be positively contributing going forward in 2024 to achieve this target. So, thank you.
Thank you, ST. Since this is an important topic, I just have some quick follow-up questions. You can be short with your answer. There was a confusion about energy, whether VAT will be applied to energy, petrol, diesel, and electricity. Can you make a quick comment about that?
Yeah, there the policy would be to remove all the exemptions of VAT except electricity, kerosene, and naphtha. Mm-hmm. So all others would be subjected to that, and that would be submitted to the Parliament. I think on 10th we have concluded the session in the Parliament as usual. So that will be submitted to the Parliament on 10th and will be effective from 1st of January.
Okay. Yeah. So on fuel subject, I'm somewhat familiar, and I sat with you on a committee. There are many other taxes also. Is there a case that if the VAT is applied, some of those other taxes may be adjusted so that at the retail level you achieve something like 30% rather than more than that?
No, we are very seriously considering that also, Murtaza, because we are in the sort of path towards removing para-tariffs.
Okay.
So there's a PAL.
Right.
So we would be seriously considering to use that sort of avenues to reduce the potential implications.
Okay. And on the tax administration side, this might be a bit controversial, but the President, you were here yesterday, he talked about the Revenue Authority. Any visibility on that? He said a new law is going to be brought in. Did he say over the next 3 months?
Yes. In fact, we have sort of partially drafted that sort of law. In fact, before that, we undertook a lot of studies, again from the specific assistance from the IMF and the World Bank, basically to get the country experiences. It's very important that rather than trying to reinvent the wheel, get the positive sort of outcomes from other countries. There are some prerequisites are also there before coming up with this law. So we are sort of addressing and taking some decisions on those sort of prerequisites right now. But the idea is to come up with this sort of Revenue Authority bill, basically to facilitate the three institutions to collect the expected revenue going forward.
Okay. And on the revenue, you mentioned it, 2018, 2019, vehicle taxes accounted for 10% of revenue or more. Any visibility of when these import bans will start being relaxed?
It's a very difficult question because you're right. I mean, this is one of the key revenue sources. We unfortunately lost that for last maybe 2-3 years. It depends on many factors.
Right.
Number one is the foreign exchange situation of the country.
Right.
and at the same time, there are expected reserve accumulation targets and all sort of things under the program to the central bank, and also there are other sort of avenues, other areas that we have to be very, very mindful about it. If the people are basically trying to use whatever the foreign exchange that are coming into the country to import vehicles, so then there will be other issues in the economy. So that is one part of it, and then what would be the real policy? And for that, since the president has appointed a committee, I think most of the private sector people are, companies and representatives are there in this committee, and also the government institutions are also represented. So we are right now sort of expecting their report as well, and we are hopeful that they would come with sort of specific proposals, again based on the country experience and also the situation in our own situation, and that would basically combination of these factors would decide when to but we are very, very mindful about it, and we are very closely monitoring the situation.
Okay, thank you for those extensive answers. If I can move to Faris, and I presume that the technology will work, can you elaborate for us the World Bank's lending program in Sri Lanka for the balance part of this year and next year, and what is meant by reverse graduation, and are there preconditions from the government to meet reform milestones as stated in the IMF governance diagnostic?
Thank you very much, and thank you for inviting inviting the World Bank. I hope you can hear me.
We can.
It's great, wonderful. It's a pleasure to be here with all of you, and this is, I think, the second or third time I've had the privilege of doing this. Very relevant question, and I'm happy to be following ST on this issue. Let me first talk about the process of reverse graduation, because I think it's important to set the scene on this. I don't think I need to tell any of you, and we all know that Sri Lanka's financial crisis affected its creditworthiness, which effectively meant that the country could no longer qualify for access to the market, etc. And the key window in which Sri Lanka at that point, leading to the crisis, was accessing was one window of the World Bank, which is called the IBRD, which is the International Bank for Reconstruction and Development, which are the sort of the non-concessional arm. So it was no longer eligible for that. At the government's request at that time, and the government moved quickly, we took steps to enable Sri Lanka to continue to be eligible for lending, because we felt it was really important. But it was important to be eligible for concessional financing, which is a different window of the World Bank called the International Development Association, IDA, that provides low interest or even interest-free loans. That process in and of itself of moving away from the IBRD to a more concessional financing window, which was really important, is what we refer to as reverse graduation. And that was really important because it allowed us to offer Sri Lanka new financing at about 1/3 of the cost over the next few years, which approximately, I'm not going into details, about 37% in net present value terms. Now that allowed us an opening to provide financing. And what we did early on in coordination with other development partners, and I see colleagues from the ADB there, and I know Sarwat couldn't join us from the IMF, but they were also instrumental, is we have provided a total of 850 million in new financing this year alone, and this was really necessary to sustain Sri Lanka and its movement towards recovery. Following the approval of the IMF's extended fund facility, which happened in March, we approved a total of 700 million in financing for 2 operations. This was in June. The first is a development policy operation we call RESET, which is hopefully, surely an appropriate name, which is the Sri Lanka Resilience, Stability and Economic Turnaround Development Policy. And that's a budget support operation linked to new financing of $500 million. And that we moved very quickly on. And we also at the same time moved with a $200 million social protection project. And this was really, really, I feel, instrumental and timely to support social protection programs, to restore macroeconomic stability, etc. I'm very happy to report, in addition to those 2 operations, just this month, another $150 million was approved for a financial sector safety net project. which is a project that is also part of this trinity of engagement: structural reform, social protection, and safety nets that will help strengthen the financial sector by boosting financial institutional capacity of Sri Lanka's deposit insurance scheme, and also injecting funding to the deposit insurance scheme, which is really important for the continued protection of investors, of depositors, excuse me. And obviously, this was very much coordinated with our colleagues. Now, just to answer your other question on what are the preconditions, et cetera, and let me talk a little bit, and then I'll hand over to colleagues of our budget and the budget support operation. This budget support is not just injection of money, it's injection of money based on some key milestones that are very consistent with the government's reform program, the IMF program, et cetera, what we call prior action. And they really were based on reforms in three pillars. One is on economic governance, the other is on growth and competitiveness, and the third, last but not least, on social protection. And what we hope to do is as part of the budget support, we've initially dispersed 250. We hope to disperse the second tranche by the end of this year of another 250 based on a similar policy actions. And we are already working with the colleagues. ST would also elaborate on that, on a second development policy operation to enable disbursement of further budget support to the government in 2024. Now, obviously, these are contingent on some critical prior actions, which are the government's own reform priorities. Now, the three sort of areas that are really, really important and that govern our support, our budget support, is really on three themes. One, as I mentioned, is on economic governance and policies towards enhancing economic governance and achieving macro stability. And the idea here is not only to go through structural adjustment, but to address the economic governance issues that contributed to the current crisis, and to make sure that we have guardrails moving forward that prevent us and avoid us falling into this again. The second is returning to Sri Lanka to the days when it really was competitive, was exporting to the global markets in a wide range of things, and reform and essential reforms to return Sri Lanka to global competitiveness. And that requires work within. And the work within to make sure there's a level playing field for entrants, for companies to be competitive and to be able to thrive. A key part of this is what happens within the policy framework, what happens within, with that ability for entry, access to finance, but also the role of state-owned enterprises and their role in not crowding out private sector, not creating further fiscal and financial risks, et cetera, et cetera. And last but not least is the social protection, and that's a critical part, but I'm sure we'll talk about that later. Thank you very much. Over to you.
Thank you, Faris. That was comprehensive. I just lost you with some of the numbers. We have a month more to go for this year. What is the balance amount that can be dispersed for 2023?
Well, by 2023, we should have dispersed. We have a 500 by the end of this year, all things being equal. We have 500 in a budget support operation that is dispersing in two tranches. We have already approved another project for 200 million for social protection.
Right.
And recently a third project for 150 million for the deposit insurance. So that is a total of $850 million.
But how much has already been dispersed?
Well, the disbursement is actually based on achievement of milestones.
Okay.
So in budget support operations, 250 plus 250 has already been dispersed. That's 500. The 200 million for social protection is already there and is going to be dispersed in monthly tranches as we move forward. So the idea is making the money available for the authorities to disperse according to the agreed timelines. On the deposit insurance, the idea is that full chunk of money for the deposit insurance scheme would go into an account that would deposit those. So those, all of them are available. Now, when we talk about disbursement, we're talking about, for instance, social protection. The 200 is already available and it would be dispersed according to the government's schedule.
Oh, okay, thank you. If I can move over to you, Taka. Can you also, like Fariz, concisely elaborate the ADB's leading program and whether there are any conditionalities?
Hello, good morning. My name is Takafumi Kadono from the Asian Development Bank. Great to be here, and well, thank you to the Ceylon Chamber of Commerce for organizing this event and having me here. So with respect to the Asian Development Bank, or ADB's program, similar to what Faris has described, and of course we are all aligned in our approach, and we're taking similar approaches supporting the IMF's EFF program execution, or the government to undertake reform actions. So in the past, we have been providing financing for projects mainly, whether that be in education, skills development, health, transport, energy, etc. These were more project investments that we were supporting. But now with the IMF's EFF program, starting this year, we're going to be switching the way we operate here in Sri Lanka, focusing on budget support, as Faris mentioned. So this is in order to bridge the financing gap, according to the IMF's EFF financing table. The expectation there, and I emphasize expectation, is for the Asian Development Bank to provide up to $2 billion from 2023 to 2027, which is the end of the EFF program. So this year, on the back of the approval of the EFF program in March, we approved a $350 million, what we call policy-based loan. Faris calls them the development policy operation, but they're essentially the same. These are budget support on the back of policy reform actions being taken. The special PBL, the policy actions were just aligned to the IMF's prior actions, so there were no additional ones. But this was disbursed already in May. And this year, we have more of these policy-based loans, or PBLs, in the pipeline. And our approach, I guess, is a little bit different from the World Bank. We opt for a more sector-specific approach. So we have these PBLs, for example, in the financial banking sector reform and stability, and power sector reform and stability or sustainability. So this year, today we were having, before this I was sitting back there because we had our pre-board meetings for 200 million financial sector reform and stability PBL, which we hope the board will consider positively in the first week of December. Now, but this is also contingent on the IMF as well. As we all know, we are waiting for the IMF's board to consider and hopefully approve the first review. So once that is done, we will be able to disperse or approve and disperse this fund. We had another PBL in the power sector, which we hope that would pass this year as well. This is for $100 million. And, but due to just one policy action not being met, I think it will be slipping to 2024, but January. So these are like the PBLs, but we also do have projects like Faris mentioned. One is, maybe you saw on the news, we signed a relatively small but important project in the transport sector, $60 million, which I had the pleasure of signing the loan agreement yesterday with the ST, which was actually my first loan agreement I signed here. I only came here 4 months ago, so it was an honor to be able to do that. But this is an important project. We have been supporting the transport sector for a long time. And I think like this rural road project, we have been doing since 2014, so it's been like 10 years. And this is really to support the rural connectivity, to bridge the infrastructure gap, bridge the urban-rural divide, to spur economic activities in the rural areas, enhance their connectivity to the market, etc. So, but the project it was stalled because of the economic crisis, and many of the rural road constructions were abandoned because the contractors could not be paid. So without waiting for the IMF, we quickly tried to process this so that all those ongoing constructions can resume and there will no longer be road safety issues. The other project we are expecting in January or February is our support to the small and medium enterprises. So this is for in the tune of 100 million. And of course, we need to wait for a board approval next year. But basically, it has two components. One is to provide working capital through financial intermediary loan modality. So basically, ADB will provide financing to the government. The government will on-lend to or relend to the participating financing institutions, who will relend to the small and medium enterprises. So that's half of that project. And the other half is our loan will be used by the government to inject equity into the newly established National Credit Guarantee Institution. So this will basically support SME borrowers who typically do not have sufficient collateral to access bank financing. So by having this NCGI providing a partial credit guarantee, the expectation is that the commercial banks will be more confident to extend loans to these SMEs. So that is also upcoming. And just quickly, what we expect in the future and what we are also working on in terms of PBLs, the budget support. The reform areas we are supporting the government are, for example, in the water sector, tourism sector. We expect public financial management, and in that, of course, we want to work closely with the IMF and the World Bank. We're also looking at trade and investment type of policy support as well in the future. So again, and these ones, we are adopting what we call a programmatic approach, and I think the World Bank is also doing that as well. This ensures that we can maintain our relationship with the line ministries and Ministry of Finance and all the stakeholders, that the policy actions are met and that they are sustained and that there are no policy reversals. So, for example, the financial sector one, we expect approval this year. We'll have another one next year. And by next year, when we're processing the next batch, we will, of course, check that there were no policy reversals. If there are, we have to stop, right? Same with the power sector. It'll be across 3 years. So we will maintain that monitoring and the policy dialogue with the government to ensure that the reform agenda is sustained. So, stop there.
Thank you, Taka. A quick follow-up. Faris talked about reverse graduation. And he said it will cost 37% less on NPV terms. Does that apply to the ADB also? Can Sri Lanka borrow cheaper?
Yes. Yeah, sorry, I forgot to mention that. Well, Faris is diligent, so he calculated the NPV benefits. I haven't, but I think we're in a similar ballpark. So originally, as Faris mentioned, the World Bank has this IBRD window. We call it the OCR. The ordinary capital resources. These are, well, it used to be LIBOR-based with a 6 months LIBOR float with a spread. Actually, we still have that for Sri Lanka. But in June this year, we call it the reclassification. We reclassified the status of the government of Sri Lanka so that it can access concessional financing. So what Faris mentioned about AIDA, we call it the Asian Development Fund, or ADF. So this is a fixed interest rate. Well, I mean, to be specific, has a maturity of 25 years, including a 5-year grace, and 2% interest throughout. So this will be much cheaper than, I don't know what SOFR, so now it's SOFR, right? It's like 5%, yeah, so it will be much cheaper. However, the caveat is that these concessional loan envelopes are scarce. So in our case, and I don't know about the World Bank, but going forward, we will not be, well, the government will not be able to tap this concessional loan alone. If we are to provide that budget support, the full amount of the budget support. We probably will not have that amount. So the government will still have to access some of that, the ordinary capital resources. But we try to mobilize as much as possible the concessional funding for Sri Lanka.
Thank you. Bingo, if I can move on to you. NPL was based on the incurred loss model, which we are not continuing with. Now it's the expected loss. So as per CBSL, stage 3 loans to total outstanding is 13.5%. You used to head the Bankers Association. Can you give us some kind of trajectory of asset quality in Sri Lanka and where there are problematic loans?
Yeah, thanks, Muthusas. The first thing I would like to say is globally, when the pandemic happened, global averages have gone up. Some countries up to 50%. Global averages around 5.5%. If I compare Sri Lanka with a market like Ghana, because we have similar behaviors, Ghana is 20% as we speak. Bangladesh, going through a bit of external sector stress right now, is hovering around 10%. So those are the regional numbers. India is a very promising story. It's I think mid-single digit or low single digit. So there is stress in the system post-COVID. Banks, central banks have done moratoriums, etc. But there is a lot of stress in the system coming out of the moratorium as well. What we've seen is actually the larger companies have taken market share and stayed strong and grown. It's similar in Sri Lanka as well. SME turnovers are down by 7 to 30% in the region, Asia region. So these are some numbers that we can also relate to. Some of our SMEs are completely gone down. So that's the reality we're in. If I look at Sri Lanka's historic data, 99 we've seen a 15.8. So we've not reached that level yet. So that's promising. The lowest we've seen is 2.5% in 2017 December, but that also I have to say something because in that time you saw a bit of a slow economic growth. The NPLs came down, but suddenly it went up in 2018 and 19 because credit to the private sector was double digit when the economy was growing at low single digit. So that's also a bad outcome. So now the current situation, if I look at, here's the good news. The good news is actually our NPLs have now kind of slowed down. It went up to 13.6, now it's hovering around 13.1, 13.2. The net is now down to 7.2 from a 7.8. Very clearly, we have come to the end of this road. But what we see is still, in terms of sectors, tourism NPLs are 33%. So very clearly, some of the tourism sector enterprises will not recover. You can clearly see the stress in that sector. Transport and logistics is 30%. Because the disposable income has come down, the less consumption, the sector is impacted. Some clients who went down during COVID will never recover, sadly. There's 30% NPLs in that sector. Interestingly, arts and entertainment also close to 20%. Again, when the disposable income goes down, there's impact to arts and entertainment. You first eat, right? So very clearly, there are impacted sectors. But as a banking sector, we are very clear on one thing. There are no standard moratoriums going forward. Because banks are fully aware of who's in stress, and there's a lot of restructuring happening as we speak. Talking about moratoriums, again, there are three types of enterprises, individuals and enterprises. Some took the moratorium and somehow paid. They disposed some assets, they took cost action, they understood the size of the business, what is possible, what is not possible. I think more than half, I would say closer to half, have actually gone ahead and done that. There's a good 20%, I would say, or more, I don't know, who have taken the moratorium and done other things. They thought they can buy time and they can wait and they don't have to settle these loans. So they are in stress because they have now created more assets, no cash flow. So they are lobbying for more moratoriums and prolonged moratoriums. There is another important sector, they took the moratorium, but they are unable to settle. Their cash flows are not enough. Now, tourism sector, we see some have recovered to close to a pre-COVID level. I would say 80% of pre-COVID level, not fully recovered, but they can keep the nose above water and service the bank loan. The other thing to note is these loans were restructured post the moratorium, restructured at very high interest rates. Rates were high. So that component, I think all of us in the banking community will have to take a look at that component and see what more to be done. Because if there's no cash flow, there's no payment, period. So pointless keep on going thinking clients will pay. That will also come to the NPLs. We can celebrate saying we have come to the bottom of it. But you never know. If that portfolio goes bad, that's a good portfolio going bad, actually. The promoters are good, business models are good, but sadly the cash flows are not supporting. So that individual banks are very actively looking at that portfolio and supporting. If the clients are supportive and they come midway, banks will also come midway. But we can't have like a one-sided approach where we keep on giving moratoriums and write off some of these assets. One thing is very clear, banks are not here to acquire properties and run a be a landowner. We don't want those. I mean, it's very difficult to dispose assets anyway. So very clearly, that's how we are approaching this. I think a couple of other things, clients also have to come to a bit of a realization in terms of what is possible and what is not possible.
Okay,
that would be critical.
There will be a follow-up question on resolution about the new insolvency framework that has been recommended. So we'll come back to this. If I can go back to you, ST, you are widening the tax base and reducing loopholes and concessions, but we still have the Strategic Development Act that gives the right to give 25 years tax holidays, and the Port City Act 40 years. And we still have many previous tax concessions that were awarded many years ago that were not sunsetted. If I can juxtapose the IMF's governance diagnosis, they have said that these agencies that have the right to give these tax concessions should be stopped, and the Director General of Fiscal Policy has to be involved in computing the tax benefit analysis of any concessions. And they have also recommended that the cost of these tax concessions as a tax expenditure be disclosed. Can you comment on each of these items, why we are continuing with the STA and the Port City Act? Second is what can be done to sunset some of these previous tax concessions, and about calculating tax expenditure.
Yeah, you're right. I think if you very carefully go through the governance diagnostic report, they have specifically referred to this SDP Act also, sort of concessions given in the past, and we have been very carefully looking at those analysis, and at the same time we have sort of an agreement with the IMF as well to basically very seriously look at this particular issue that has been highlighted by many. So the government is now in the process of taking steps to review the overall framework of tax incentives, and new framework will be introduced shortly. And then when you are introducing this sort of new framework, we will be addressing particularly this SDP related concerns to basically have a transparent system. So that's what basically people are asking for. We would certainly be coming with a sort of a transparent system going forward. At the same time, so this new framework will ensure the appropriate balance between the attracting investors, and also driving the growth, ensuring that we have to be ensured about government revenue as well. So all these aspects will have to be considered and taken into account when we are coming with a new sort of framework. And the other one on the tax expenditure, you are right. In fact, we have been asked to sort of come up with the tax expenditure and to publish it. So publishing expenditure report is the sort of key aspect, so that everyone could have an idea about sort of revenue foregone and whatever the other sort of conclusion that they will be able to come. So it's a process. In fact, World Bank is, I think Faris is there, he will vouch on that. They are basically assisting us, and we have appointed a committee, and we have met the committee as well, and all these sort of institutions are also involved in that. For example, the BOI, customs, and everyone is involved. And we have had the very first meeting, I think, on that, and we would be coming with a sort of analysis, sort of detailed analysis very shortly, and that will be published so that everyone could know about it. And the other sort of,
Is there a timeline on that?
I think under the World Bank commitment, I think it's February, if I remember it correctly. So that's the sort of, agreement and the timeline that we'll have to, publish this report. And the third one about, this, continuation of the concessions. In fact, you are right. I mean, to say that tax holidays extended in the past have important revenue implications as well, and at the same time, in some cases, those can be distortionary in nature. Basically, that's the feature of those sort of concessions. But it's very important that these are legally binding commitments that past governments have entered into. And if you basically, ad hoc basis, if you are basically, take retrospective measures to change some those sort of, contracts, can have significant legal implications. That's the sort of, concern that we are having right now, and it may also have, implications for the perception of investors as well. I mean, we are, in fact, eagerly waiting investors to come here and, invest in this country. So if you are basically on ad hoc basis, try to, remove these things that could have, legal as well as other unforeseen implications, that will have to be also, taken into account. So it has to be very carefully, navigated through this, process. And we have to strike a sort of an appropriate balance between addressing revenue concerns and at the same time avoiding, whatever the potential legal pitfalls, and understanding investors, not to undermine investor confidence as well. So all these aspects will have to be taken into account. That's why we have not, taken any specific measure right now. And going forward also, these are the sort of issues that we'll be facing if you are trying to address this.
Thank you for that clarification. If I can move over to you, Fariz. The World Bank had a large, or they gave a lot of technical assistance for developing the SLES program, and you also provided some for funding. Can you explain to us how you all went about thinking about the program and designing the eligibility criteria, and how you contributed to the framework?
Thank you. Thank you very much, Murtaza. Happy to talk about that. On the SLES, I think first and foremost, let me just jump back very quickly and just to respond to ST's point, and just to say that I do vouch for what you said and concur, ST, on the timeline, particularly on the publishing of data and things of that sort. That goes to my first answer that our budget support operations are linked to some prior actions and policy actions, and this is a critical one of them. So turning back to the SLES, I don't think I need to tell anybody in the room, and we'd all agree that this SLES welfare benefits, or clear and transparent and sustainable welfare benefits, are a critical pillar of the government's reform program, particularly to mitigate the impact of the current crisis and to protect the poor and vulnerable, which becomes even more relevant at this point. So this is really, really important. We should remember that this is a process, right? And this is an evolution following a system that existed, that predated this, that frankly wasn't fully meeting the needs that it required. So basically, the principle of SLES, and I should add, and we all should be very clear about this, this is a government program. This is not a World Bank program. We're supporting it, we're funding it, we're providing technical assistance, but it is a government program and part of the government's reform initiative. It's a shift to more of a people-centric social protection system where the poorest are prioritized for government support. And the idea, the pillar there, is to have very transparent selection criteria. And to be very honest, minimizing the risk of political influence and elite capture, which is what we've seen before. This is why it has certain aspects, including eligibility criteria, direct transfers to the bank accounts of the beneficiaries. So it's not only about social protection, but increasing financial inclusion. So as you said, Murtaza, we have indeed been providing technical support to the development and implementation of the social registry for SLES through the project that I had mentioned earlier, this 200 million that is already online and is dispersing, is there available for the government to disperse for the payments of the people. And so we're helping with the technical assistance as well as with the initial financing of the Aswasuma cash transfers. Now, to answer your question specifically on the design of Aswasuma, this was a design that has been informed by international good practices, and this is where the World Bank and others come in. Again, this is a process. It is not something that will be fixed. Rome is not built in a day. It will take. It is a process that requires, tweaking. It requires removing glitches, etc. It's a fundamental paradigm shift, not only in terms of the institutions of social protection, but the way social protection is handled. So the Aswasuma uses eligibility criteria that assess a family's deprivation level, and has something which, in jargon is called a dynamic registry. I'm looking. I have to remember these notes. I'm actually looking at my notes. A dynamic registry that allows basically potential new beneficiaries to apply for the program on a regular basis. And the beneficiaries, the idea is it's regularly assessed at least once every 2 years during a recertification process. So it's a process that always is a robust system, but it requires constant challenging, adding, removing names, etc. And this was done by the government. The eligibility criteria was determined by the government with support from the Department of DCS, Department of Census and Statistics. Now, another issue about Aswasuma, it has a differentiated payment system based on different deprivation levels, right? So basically higher cash transfers to the poorest and lower cash transfers to those who are relatively less poor. And the idea is to provide need-based assistance. So the greater the family need, the greater the cash transfers, right? Having said this, and there's been a lot of discussion, and very rightly so, on the Aswasuma program, that's saying, well, it's less, people are getting less, etc. It's important to get the facts straight, that even the relatively lower cash transfer in Aswasuma for the less poor beneficiaries are actually consistent to the higher transfer under the previous Samruddhi program. So that's a very important issue. Now, under the previous system, so this is where we are. It's being rolled out. We are supporting the government's program. There is a recognition that there need to continue to be work to fix the glitches, to evolve the program. Again, it's a fundamental institutional shift. But it's really important to take into account that the ex-ante program, the program that existed before, under the previous program, less than half of the recipients most in need in Sri Lanka of support, Sri Lanka's poorest ranks actually received the cash transfers, while 12% of the highest income earners also received benefits in the previous program. So this is the pre-existing program. The idea is to move to a new dynamic social registry that recertifies beneficiaries and allows for people who are better off to actually exit rather than staying there forever, like we've seen in previous ones, and to allow new entrants to come in. This is a process that's moving forward now. The other two important things, and I'm sorry to take so much time, but this is very important. I know there's been a lot of concern, rightly so, and a lot of dialogue. It's important to get it right. One is two critical aspects that this program, it has been, and we hope will continue to do, is it has direct transfers. So what we've seen as a result of this, more people having bank accounts, financial inclusion is increasing, and direct transfers from the central pot to the beneficiaries without interference. There are issues currently, there are grievances of people that are not receiving it that should, people that need, and we believe that process is going. We do hope this happens as quickly as possible. We do hope that this everybody who's filed the grievance who deserves this will get this as soon as possible. And we in the World Bank stand ready to support to make sure that this happens. So our own advice, which we've been giving to the authorities, and we're grateful to them for being open, is to make sure that this program continues to be A, dynamic, B, inclusive, effective, transparent, and resilience. So open registration has to be there, and very clear communications. A lot of people need to know where to register, how to register, if they're eligible. We also have been working to support and think this is important, timely recertification of beneficiaries. This has to happen timely, having a robust grievance mechanism and supportive and really supported new beneficiaries so they know what the system is. I believe we're still in the teething pains of that. And I think the sooner we can get that over, the better. But structurally, it is, I think, an important fundamental shift in the government's policy approach to that. Thank you very much.
Thank you, Faris, for that comprehensive answer. If I may add, our own Shanta Devarajan, who was formerly with the World Bank, is a world expert on this cash transfer. And he keeps on reiterating that previously we wasted all the resources trying to give subsidies through prices. And the World Bank themselves did an analysis to show on energy subsidies, basically 70% of the benefit of energy subsidies went to the top 30% of households, including myself and many of you in this audience, which has no merit. Today, the program is to allow prices to reflect their scarcity value and transfer cash to people who really need it. I think there's a lot of criticism about Aswasuma, but there are hopefully teething problems and that there will be no reversal. So if I was to move on to you, Taka, I think you touched on this, that you are helping the electricity sector. The electricity board has been a perennial problem child. We have experienced 11 hour power cuts, brownouts and blackouts, and some of us are having to pay extremely expensive domestic tariffs. I think I'm paying something like 28 US cents or more, about 180 units. You have a background in the electricity sector. There is a new Electricity Act out that is suggesting broad-scale reform. Can you concisely tell us certain characteristics that we should keep in mind to do a successful transformation? Because what I'm told is that not every country gets these restructurings right.
Okay, thank you for that question on the power sector, which is in my domain, so I feel more confident all of a sudden. But before I go there, I just want to follow up on what Faris said on the social protection, if I may. We also do have, we do envisage to support social protection or social safety net going forward. But currently, we understand the World Bank is providing maximum support to the government already on the Aswasuma. So we are watching how things evolve. But the other thing we are already doing is, I think World Bank, ADB, we both supported during the height of the economic crisis, the Samurdi payments. As an extension of that, we are working on a graduation to support the poor and the vulnerables graduate from receiving this kind of cash transfers. More specifically, we are trying to give them a livelihood means so that they do not have to forever continue on this transfer. So I think this graduation is also very important, and I think many of our development partners are also supporting this. So I think that was just one thing I wanted to mention. With respect to the power sector, so I mean, just going back to which areas of the government's reform we are supporting, I understand the Honorable Minister Kanchana will be on stage in the next session, so without going into too many details, so this power sector PBL has three reform areas. One is the restructuring, namely the unbundling of CEB. And the second area is on the tariff structure, pricing mechanism, to make it more cost recovery and transparent. And the third is promotion of private investment into renewable energy development. So these are like the three sectors, and each of the reform areas have specific policy actions. And one of the key policy action there is the electricity bill that you mentioned. So well, I'd like to commend the government for obtaining cabinet approval of the electricity bill. I think it was last week. We did expect it to be earlier, and that's why we cannot process the PBL this year, but it would slip to next year, unfortunately. But we do very much, again, applaud the government's leadership to undertake this very difficult reform and for being open to development partners like ourselves. I think in the power sector, it is well, ADB, JICA, USAID, World Bank. who are engaged in policy dialogue and providing advice to the ministry as well as its Power Sector Reform Secretariat. So we did have follow-on comments on the contents of the electricity bill. I mean, we generally feel that our advice were taken and incorporated in the bill that was submitted and approved by the cabinet. But there are several areas that may require a little bit of an improvement. One is, I think, on the independence of the regulatory authority, the PUCSL. There is room to improve the language so that its independence is assured, both in terms of regulatory actions, but also financially as well. The regulator should be financially independent so that it is also protected from any other influence. The other is, I think there was a provision on dispute resolution mechanism in the current electricity bill, or the former electricity bill, and which is not included in the new one. So we did suggest that this should be included. And the third point is on open competition in the procurement of generation or transmission capacities. I think the electricity bill discusses or refers to the national procurement guidelines, which is a guideline not really meant for power sector. So there should be more clearer language in how these power sector specific procurements are being made in an open and competitive manner. So those were kind of the three issues. But if I may, so I worked on power sector reform in Vietnam when I was living there and working both for ADB and then as the World Bank as well. And at that time, there were studies on, well, it was a World Bank study called Rethinking Power Sector Reforms in Developing Countries. And we provided some inputs into that study as well. I guess first and foremost, I mean, we need to understand, like you said, the power sector reform or any type of reform, you need to take into consideration the political, economic context, right? So, and we need to ensure that there is strong political will. I mean, and so I guess in the case of Sri Lanka, there is that strong determination. So I think it's appropriate time to undertake this. And the other anecdotal evidence is that the power sector needs to be of a certain size. You cannot take a very small system and try to unbundle and expect it to be more efficient. So reasonable size. I think the power system here with 4,000 plus megawatts is quite sizable, and it does give you the option of considering unbundling as well for enhanced transparency and competition. And in relation to that, the other criteria would be the electrification rate. So Sri Lanka has almost 100% universal access. So that foundation is already covered. So now I think it is time that you can move on to fix the other issues. So that brings me to the next point about generally what you need to be mindful of when you implement or design power sector reform is that you need clear objectives here, right? So in the case of Sri Lanka, what do you want to do? I think you want improved strategic planning of the sector. You want to lower the cost of services and lower tariffs. But at the same time, the tariff needs to be cost recovery levels as well to keep the industry going forward. And then you also need to take into consideration policy objectives as well, right? So private sector participation is a huge agenda, and I think this type of reform will enable that if you do it properly. And you want to promote renewable energy. Green growth was emphasized by His Excellency the President many times yesterday as well. You want to decarbonize the sector. You want to reduce fuel imports. You want to maybe ultimately export power to a neighboring country if there is connection. Or the other day, there was a conference on green hydrogen. If Sri Lanka can produce cheap renewable electricity, maybe you can become a powerhouse for green hydrogen. So all these policy objectives should also be incorporated into the thinking. And of course, the design of the entire scheme of the successor companies, what are the contractual arrangement between them, what are the pricing and payment mechanisms, all these things need to be very clear, and including how the independent power producers come in, how they're, whether you have a bankable power purchase agreement, etc. And yeah, we need to make sure that the private sector has the incentive to come in, and they feel confident that they can enter into a long-term arrangement, make that big upfront capex investment. So essentially, you need a stronger governance, transparency, and like open access, which is also already inscribed in the new electricity bill, is very important. And I guess, so if such foundations are set, I think ADB's private sector arm or IFC, have Alejandro there, who will be on stage next, we will be happy to provide credit enhancement support or direct loans, etc., to promote this kind of investment in the power sector. And finally, I think there's a roadmap here as well about introducing a wholesale electricity market after several years, or changing from a single buyer. So one of the successor entities will be the national system operator, which is supposed to be the single buyer of electricity, which later on will become a multi-buyer model. So this kind of a vision and a roadmap is also important to give investor confidence, so they know what's coming up and what the risks may be and how they may be able to manage those risks.
Thank you, Taka. I think the key takeaway from what you said is that you need competition. And we hear about projects being awarded due to geopolitical considerations, but they must protect the interests of the consumer. And you need to have competition in determining who gets what project. If I can move on to you, Bingu, as a follow-up.
Can I just, sorry. I just saw Alex sitting there, so from the French Development Agency. So for this competition, investors, there shouldn't be a symmetry in the information that is available to the investors to get the best price. And I think we want to work with the French Development Agency as well on a platform called Source, which has been supported by many multilateral institutions and development partners. So this will give more transparencies to what kind of projects, investment opportunities are upcoming in the renewable energy space. Thank you.
And I think I remember from 5 years ago, the World Economic Forum had talked about the Swiss challenge, that if you have unsolicited bids, you should be opening it up to a Swiss challenge, allowing somebody to better it. Bingu, about the insolvency law, there is a draft out with the help of World Bank's technical support. You mentioned about the NPL issue. Under Parate law, the banks have seniority of claims, but they don't have to consult any of the creditors. I believe the new insolvency framework will preserve the seniority of the banks, but it will force them to be in a more consultative process with the other creditors to either hopefully improve recovery rates, not only for banks, but all other creditors, and most importantly, to first try to resolve the stress and resuscitate the firms rather than resorting to liquidation. Because if most of the banks resort to Parate, it's about you exercise your right on the collateral, right? And then the survivability of the firm comes down. Can you comment about how the banking industry will view this new insolvency law?
Short answer is, Murtaza, we are supportive. We were given a 300-page document review in 1 week. So our lawyers have looked at it. We're engaging external legal counsel as well. When you say insolvency or bankruptcy, these are taboo words in Sri Lanka. And our laws are archaic. I think in the Companies Act, Section 497 has some provision, but I can't recall in my career anybody going into bankruptcy. We keep on borrowing, doing something, keep on trying to, be in business, go into more debt. This has a very good side if you look at from an enterprise standpoint for the corporates and the individuals. First part of this, actually a larger part of this act is actually to revive these industries. A lot of people think these are bankruptcy law to now make people bankrupt and then recover. So the first part is actually to see whether creditors can get together and restructure some of it. And there's provision for the enterprise who borrow during this time also. If there's a bank focusing or any enterprise focusing on buying toxic assets, you can also buy. You can restructure and recover through this process. So there's a consultative process, multi-creditor approach in this. I think it's very good. It's also like the country's situation right now. We are gone into debt suspension. We are taking a multi-creditor approach. Creditors are discussing about what haircuts and what to do with the country. Same thing. And we come out of it, right? So that provision is given to an enterprise. I think it's a good thing. My first comment is that. So if you can't recover, if the recovery values are bad and then the debt is very high and more than anything, business is not viable, you go into liquidation. So on the liquidation, there are many things around a framework, a regulatory body, liquidation practitioners, which we don't have in Sri Lanka right now. So a lot of thinking will have to go in terms of building the framework for Sri Lanka. We're very supportive. And also it has provision for, to protect the creditors as well. In a way, like if a borrower, get into any kind of a fraud, hiding some of his assets, it's a criminal offense. So that's also a good thing. Similarly, a stronger lender like a bank, if you go into Parate and you recover your assets and you can't walk away like that. So it's a multi-credit approach. There are multi-credit agreements that they talk about. And also they're looking at 3 types of segments as well. The individuals below 1 million, no income, no business, you write off and move on. I think the SMEs looked at it differently with a practitioner, insolvency practitioner. You can manage the SMEs in that framework. For the larger ones, you go into proper liquidation with an administrator like any other country, like a proper liquidation process. The challenge there is, we have, I think, 4 commercial high courts for large assets. And we're building a 5th one, if I'm not mistaken. We might have to have a separate bankruptcy court. IBC, Insolvency and Bankruptcy Court, is a common thing in other countries as well. So without that framework, if you go into liquidation, now take the country situation, we are very good actually as compared to other countries. Now Zambia took 3 years to come to wherever they are. They're not done yet. Sri Lanka has done it in 1 year, right? So if the creditors don't get together and the process is not working, the creditor groups are not coordinating, this can prolong, and you might even kill a business without going into restructuring or insolvency, whatever. You might lose the recovery values. So those are some things to think about. Overall, I think it's a good thing. Industry is supportive, but we have to think through in terms of who should do what bank, the role the SLBA will play, because SLBA is an industry body. We can't run with it. We'll be an enabler, supporter. Central bank is definitely supportive. Timelines is something that I can't commit, Murtaza, at this point. We have to think through a little bit in terms of implementation. But overall, this will do more good for the country than bad. We've seen a very good outcome in India and so many other countries. And eventually, I think the businesses will appreciate having a framework like this. We might have to call it something else, but we need to get there. I mean, that's a way out from this situation, because the 13.1 NPLs that I spoke about, maybe there's a lot in that you can't recover. You never know. There's a lag effect in a crisis like this. Now, for an example, construction will see a lag effect. In 2022, also construction had a good year, in my view, because they had a lot of stocks bought in at $200. So especially the supply chain of construction made money, the hardware stores and all that. Now they see a lot of stress. Supply chain of apparel will see stress now, because apparel volumes have come down. The supporters, subcontractors will go into stress in 6 months' time. So getting the framework right, and we should not think we need for this framework for this crisis. No, this is for the future. It's extremely important that we have a solvency framework, but you have to protect the right of the creditors as well. So I'm sure once we go further, we'll understand this better and come out of it. But one more thing, Murtaza, I was not very sure about, when you are going into the restructuring, I was not very clear whether banks can go into parate or whether banks can go into debt recovery. So I think debts will go into a suspension. Debt recovery process will go into a suspension. That's the feeling I got. So banks might lose out in a way. Banks or even the leasing companies with leased assets and all that might lose out during the process. So something to think through in terms of our capital adequacy ratios and how we recover.
So I also have a keen interest in the insolvency framework, but it's a 300-page document. Now you have these new AI tools, you can ask them to summarize this. I certainly hope that more people read that summarize, because it's a game-changing law, because it will also provide more willingness for banks to lend, that there is a more predictable solvency law. If I can move on in the interest of time to you, ST, and combine two of my questions on the expenditure side. So there is one on the primary expenditure side. Actually, when I unbundle the numbers, the expenditure projections are quite low, right? If you take out the bank recapitalization, and if you look at recurrent expenditure without interest, the growth is only 15%. So I have many parts to that question, so I'll expect short responses. You're confident you can hold it at that 15%?
We are trying our best.
Right. And the main
If you
component
see this year numbers,
right.
In fact, due to the increase in the interest payments, which is about close to a little above, I think, 2 trillion, you can't see that in terms of GDP. I'm talking. There's a significant, decline in the other expenditures, excluding. That's why we have been able to, maintain a primary surplus.
So what are the areas that you have reduced expenditure?
It's across the board. I think you would remember the very first circular that we issued somewhere in April last year. We sort of, gave a specific strict instructions to, follow when you sort of incurring expenditures. For example, termination of recruitments, termination of some of the projects which are non-priority sort of basis, and a number of measures were taken. My assessment is that increasingly line ministries are falling in line with these instructions. That's a good sign, but we have a long way to go. So if you see the other goods and services, it has increase has slowed, and compared to last year, this year we have not increased the salaries. There, if you see in terms of GDP, it has in fact declined. A very significant increase was there in interest payments. So if you take as a sort of combined outcome of this, we have seen a considerable decline in the expenditures.
So there was something in besides the budget, that 5,000 rupee of the increment was trying to be given from January. Any comment on that?
Right now I don't have any comment on that. Okay. But our plan was to give this the salary increase starting from
April.
Starting from January, but to start the payment from April, but to give the
arrears.
First 3 months arrears during the 6 months period from October to March. Okay. That was our plan.
Okay. And some other line items on the expenditure, the capex has almost a 217% increase, of which if you take out the bank recapitalization, it's about 60%. So this bank recapitalization, is this a provision or a sure thing?
Because we have to record in our books,
right.
So we have created space to record that. Yeah. So
that will be subject to many things, right? It's not sure like you have to put the 450 billion.
Yes, this is a sort of overall number that we have put, so that we don't have to go back to the parliament and get the fresh sort of approval. Okay. So with the budgetary approval, we will be getting the approval to go ahead with that as well. So that's the idea behind that.
Because another challenge is outside this, the other capital expenditure, we have seen that there is a challenge also to spend what is budgeted, right?
No, I think if you see the last year and also this year progress. We have not been able to, perform as we expected when it's come to the capital expenditure. Many of us know that it's very important that we, if we are to basically support the growth, we have to, implement these capital expenditures. But due to various, reasons, the progress was not as satisfactory as one would expect. But next year, in fact, thanks to this, very positive development that we are going to experience in terms of, getting the first review of the IMF review approved, and also the some sort of, progress in the debt restructuring process, we would be able to, have the access to, foreign financing, as Taka mentioned earlier, and also the World Bank finance would also be there, and some would be, a channel to, start these stalled projects. So that's number one. And then you would have seen that, there's a DCB allocation for that as well. So, and also recommencing of some of the, stalled projects would be given the priority. So there'll be some sort of, priority areas, particularly to, start these sort of projects that were abandoned or rather stopped as a result of these issues, would be given the priority. And at the same time, other, capital-related projects will also be combined, and of course with the priority.
The largest expenditure item is interest. You all have budgeted 2.6 trillion, around 10% of GDP. I don't know what GDP is.
It's about 8.2 something.
Yeah. So it depends on what GDP is going to be. I looked at the statistics. There is, by the end of this year, about 16 trillion of domestic LKR debt. So there's a lot of interest. And I was quite surprised when you did the domestic debt restructuring. It was fairly light. I mean, a lot of the bonds that were issued at like 27%, a lot of that is outstanding because the superannuation funds did not own 43% of those bonds. They only held about 22%. So you didn't get sufficient relief on the interest. Why didn't you all include many of this in the debt perimeter? Because if they were mainly held by the banks also, with interest rates coming down, they could have easily managed it, right? I mean, if they were reissued with the new bonds at certain percent, and if interest rates came down, if the cost of funds came down to about 6%, they could have easily managed the net interest margins. So why was the DDO so light? Because those high yielding bonds are still out there, right?
Can I sort of give a broad answer for that?
Right, sure.
Rather than going to nitty-gritty of that.
Yeah.
Because, I mean, the DDO, in fact, successful completion of this led to a partial normalization of the rate interest rates. You know that, market rates have right now come down to a certain extent. But, it's clear that, still remain high.
Very sticky. I mean, still, yesterday's bond auction was 14.5, right?
Yeah, what we see is that, there's you're right, there's a sort of, downward rigidity. But we are also, very closely monitoring it, and it's an issue to us as well. So we will keep monitoring those developments going forward. In fact, you asked about, DDO and also the perimeter. It was a sort of, complex and very carefully sort of designed and analyzed decision. For example, treatment needed to satisfy at least, three sort of factors, three areas. One is we needed to enable that, we achieve the IMF targets that have been given under this program. And then our expectation was to, ensure the stability of the interest rates. Right? And then the selection of the perimeter sort of needed to avoid potential legal challenges factors as well that could, disrupt the entire DDO process. So that could have had some, negative implications from the IMF program as well. So these were the sort of, policy trade-offs when you are basically designing this parameter.
Thank you. Just a quick announcement. There is a poll on the session, so to please participate in this. Two quick follow-up, because most of the questions coming in from the audience are very similar to what we already had in line. The President yesterday made an announcement about the official creditor committee that you're hoping to hear from them soon. Soon means what, in the next few weeks or?
Very soon.
Very soon.
I would say very soon.
So what exactly do we hear from them?
No, if I basically, talk about the process, you know that many of us are aware of the, IMF program and its process. Unlike the last sort of 16 IMF programs, where our debt was not assessed as unsustainable,
right.
This time Sri Lanka's debt was sort of assessed by the IMF as unsustainable. So that's why, while implementing a stabilization program under the IMF, the EVFF, we had to start the debt restructuring discussions as well with our creditors. So it's a parallel process, stabilization as well as debt restructuring. Last time, we basically went to the board to get the approval based on the staff level agreement that we achieved somewhere in September last year. And then there were some financial assurances from the bilateral creditors as well. And this time, in fact, we came to a staff level agreement somewhere in October, I think 19th or so. But at the same time, we had to have financial assurance, initial debt treatment agreement, particularly from the bilateral creditors. China Exim Bank was the first to give sort of assurances.
Can I just stop you there? When you say assurances, you all gave three options, no? Either you postpone by 10 or 15 years with 1%, or you take a 30% haircut. So when you say they gave assurances, are they within that framework?
Yes, in fact, maybe you remember that we indicated that there won't be any haircuts when it comes to bilateral creditors.
So that was
but other two options would be extension of the maturity period and the reduction of
interest to 1%.
It depends.
Okay.
It depends how you get there. So those are the sort of the terms. So China agreed in principle to go ahead with this with specific terms, and then there was a continuation of the discussions with the official creditor committee, co-chaired by Japan, India, and France. So they basically, assessed all these, whatever the terms and conditions on their own, and also we shared the terms and conditions. We agreed with the China as well, with the OCC. They have taken all this into account, and as I mentioned earlier, you will hear the outcome very, very soon. So that on that basis, we would be, because if we are not going to get these sort of assurances, it's difficult for the IMF staffs to assess whether these assurances are in line with the requirements under the debt sustainability analysis that has been done by the IMF. And if they are in line with that, they will basically, on that basis, go to the IMF board, and we would be able to get the first review approved. That's the process, and we are very, as I mentioned, soon expected that sort of announcement from the OCC.
So not to put you on the say we keep our fingers crossed and we get a positive assurance, then the IMF board meeting that is coming somewhere in December, we'll look into our case and they may approve the second tranche, right?
That's our expectation. Yes.
And then what happens to the private creditors?
So we will have to continue the discussions.
Discussion.
On that basis, I think they will also, we are very sure, we have had, very significant progress with these private creditors as well, and they will also come to sort of,
And just a last question on the same topic. The budget announced about the centralized debt office. Any comment on whether the legislation or the framework is being done and when timelines will be?
It is being done. In fact, to me, at least personally, this is one of the complex policy measure that we are, most complex policy measure that we are going to implement in this entire reform process. Because last maybe 73, 75 years, it was the central bank that has been, as an agency function, has been, managing our government debt. So taking it away from central bank and establishing it either at the Ministry of Finance or as an independent institution to me, it's a complex issue. So we have been very careful on that. We have gotten the relevant support, particularly from the ADB and the World Bank and the IMF. And we are very closely, working on that. We have had, serious deliberations within the Treasury and also with the institutions that are involved in that. And in fact, we have almost drafted bill, and we are again basically deliberating on the drafts to have best sort of legal provisions. Because currently, if you see, the debt management is handled by at least 3 institutions: Central Bank, External Resources Department, and also the Treasury Operations Department of the Ministry of Finance. So we have to basically combine these things, and at the same time, we have to have a strong legal framework, and at the same time, we will have to, be ready to, face this change with, required human resources, other institutional, arrangements. It's a process. So very soon we would be basically, submitting this to the Cabinet of Ministers for their consideration.
There are some audience questions. Maybe for the last round, when I come back, you can think about it, about the efficiency of spending tax dollars. There's a bit of anger, okay. And then about also about unnecessary assessments by the taxman. We'll come back to that. Fariz, if I can quickly pivot to you. The World Bank is helping on many structural reform initiatives. A couple of them is on human capital development and other areas. Will you be able to concisely comment about how else you are helping the government of Sri Lanka in the growth and structural reform process?
Sure. Thank you, Muntazan. I'm conscious of the time, so I'll do my best to be very concise. I think I don't want to repeat what all the good comments that ST and others have given in terms of their agenda. I think if I were to put it in a nutshell, let's break it up into the key reforms and where we continue to support to help the government on the technical assistance policy dialogue. Let's break it up into the short term and into the medium to long term. On the short term, one of the key issues is going to be, and this is not something we're supporting on, but you just discussed, is going to be the rapid and sufficiently deep external debt restructuring. That's going to be really, really critical for economic stability. And obviously the ST has given a very articulate representation of where they are. I think that's going to be absolutely important, that there's that it's deep, it's sufficient, there's COT, what we call COT, comparability of terms, and that allows us to move forward. In parallel with this, it's without a doubt that we have to have a successful completion and continued focus on deep macro fiscal and structural reforms. That's going to be really important to put Sri Lanka back on the path. I think that one is, as we said, if you can tell, one critical area is going to be on fiscal consolidation through improved tax administration. Tax administration is going to be absolutely critical to make sure that you can collect the taxes and you have the latest sort of, there's been reforms on, and needs to be further reforms on e-filing, things of that sort. The completion and the rollout of Aswisuma and having in place a dynamic social registry, that's another area where we discussed where we continue to focus on. So on tax administration, on social registry, and also the bank is providing technical assistance in these areas and others, particularly on with the collaboration with other colleagues on SOE restructuring, et cetera. So that's in the short term. In the medium to long term, the idea, there's no other way than to just pivot to growth enhancing reforms. It's going to be about growth. And this is where, through our budget support operations, we're really focusing on that. One key area is restructuring of state-owned enterprises and streamlining the investment environment to boost private sector participation and to mobilize private capital to sustain Sri Lanka's growth. That's an area where we're engaging. Another area is on competitiveness by working with the government to reduce constraints to international trade and other areas. The digital agenda is very important there, particularly in terms of not only broadband connectivity, but other areas. And as you mentioned, human capital. This is an area where we're very involved on leveraging Sri Lanka's human capital. Particularly for women in the workforce, et cetera. That's going to be very, very important because what we're seeing now in Sri Lanka, and I don't need to tell all of you, certainly we're observing it in the World Bank in our office, a huge brain drain that's going overseas. Now, where that's good for opportunities, remittances, et cetera, it is going to be a challenge moving forward in terms of making sure that we have the proper human capital to drive the reform. And promoting good governance through institutional reforms, like strengthening audit functions, public sector digitization, and those areas. Now, just very quickly, I just wanted to talk about the real sector. We have been talking about that. And one area where this is the challenge provides a great opportunity is agricultural modernization. And not only that, but really trying to tackle agriculture in terms of creating jobs, et cetera, with an export orientation. So what we're doing in supporting the government on creating an export-friendly environment, investment climate, has to be matched with, and this is where I'm sure my colleague Alejandro from the IFC will talk about later, we need to inject resources and know-how continue to make sure that there's agriculture transformation for exports. Last, but certainly not least, and this is a topic for a separate discussion altogether, and I know the Minister of Energy is going to be there, Honorable Kanchana, is reducing upstream cost and dependence on imported fossil fuels. That's a huge fiscal issue. It's a fiscal bleed, but this can be done with a win-win scenario of just energy transition and reforming the energy sector with renewable energy. I think those are the areas that for us are key priorities for technical assistance. Thank you.
Fariz, correct me if I'm wrong, there is probably from the World Bank engagement overload. I don't think in the history of the World Bank's engagement with Sri Lanka, there has been so many initiatives, right?
Murtaza, thank you for raising that. That's a good point. I suspect you raised it as a compliment, but I hope, and I would agree with you if you raised it as a warning. Yes, I hope you would all agree, and I would be grateful if you all agreed that I think in terms of the great work of the World Bank group teams, IFC, World Bank, our commitment to Sri Lanka from day one, particularly with the emergency crisis response, et cetera, has been very clear. We are very committed to the Sri Lanka structural sort of reforms, but sort of pivoting towards recovery and growth. So we're there and we have a lot of boots on the ground, but there is a need to continue prioritizing. These are the areas we see as prioritization. There's a huge bandwidth issue that we naturally see in crises. Not only, I'm sure ST would agree in terms of the client, the government and the client, but also within our institutions. So there's a lot to be done. What we need to do on day one, we need to really prioritize. I think prioritization, triage, and communication is going to be very, very critical. Thank you.
Okay, thank you. Taka, if I can pivot to you, the ADB is also engaging a lot with Sri Lanka. You are assisting with the road development programs, one of which is the port access road. Can you give us an update of what the status of the project is and when it is stated to be completed? And the second part is that you are helping the Economic Commission with the transformation of the trade and investment framework. Any comments of exactly how you are helping?
Yeah, thanks for that. So the port access elevated highway, right? So, okay, so this is a, I think it's a $300 million loan project. I think, when was it? I think 2018 it was approved. So the main component of this is the 5.3 kilometer toll expressway from the New Killarney Bridge to Gold Face. So that's the physical part. That would decongest the traffic and enable trucks and cargo to be not go into the city basically and go straight to the highway, right? So this is a very important project in terms of improving the logistics from the port to the destination and vice versa. But this, and we expect this, the physical component, to be completed end of 2024, before the end of 2024, let's say. But what is, I guess, not more, but equally important is the support that we are providing to improve the management of the road expressway side and also the logistics side. So we are working, we have technical assistance grants to do studies on the electronic toll collection system. I understand you already have one, but it's quite an old system. So we are doing studies and advising on how we can bring in the latest technology, and not just for that expressway section, but throughout the country. And on the logistics side, we are supporting helping the design of the port community system, which is a common platform for shipping lines, terminal operators, cargos and everything. They can access the same platform to simplify all the procedures for import, export, and handling of cargo. So this is something that we are working on. We're also advising on electronic cargo tracking system as well as this risk management system as well. So this project has, people only tend to think about the hardware, but there's a lot of software that is being involved as well, which is very necessary to boost the trade logistics. So, and it's kind of a segue to the next question, which is on the Economic Commission. Yes, so I guess, I think Faris already mentioned this as well, but I mean, growth is very important, right? So, of course, tax policy, tax administration is important. You want a wider tax base, etc. But there must be growth. I mean, to address the twin deficit of fiscal deficit and current account deficit and BOP pressure as well, there must be growth. And I think the president yesterday as well emphasized that there needs to be a new economic model and that Sri Lanka needs to be competitive, basically. So what we are looking at here, and of course this is again the government's reform agenda, which I think the World Bank was working on designing the overall architecture of the new this economic commission. What we are doing is what we will be doing is to complement that. There will be several entities that will be under the new economic commission, focusing on integrating SMEs into the global value chain, and the other is to better manage and develop industrial zones. So the specifics we have not, designed yet. We just started actually, but hopefully, if next year, if you invite me here, I'll be able to give you an update. But seriously, I think in the coming months, we will be working very closely with, of course, the government and World Bank as well to devise this new structure, which again gives confidence for foreign direct investment and also gives more opportunities for SMEs and domestic industries to integrate to the global value chain and be more competitive.
Thank you. Conscious of the time, Bingu, there was an audience question also, and I think we discussed this previously, so if I can take both questions, give us a sense of what financial conditions are like, the preparedness of banks to lend, because I believe private sector credit is yet contracting, and the regulator has announced that the single borrower limit is going to be changed. The ruling at the moment is that a bank can lend up to 30 to 40% of its total capital, tier 1 and tier 2. They're going to revise it to 25% of tier 1. So 30 to 40% is going down to 25%. And the capital base on which the single borrower limit is determined is also going to be on a smaller base. And normally the tier 2 cannot be more than 50% of tier 1. So I actually did some analysis. For most banks, it's like almost 30% reduction in what you call single borrower limit, which means that how much you can lend to one particular entity, and it's a group entity also. And does the undrawn lines also come in? It does. Can you elaborate on both questions?
Yeah, the first thing is on the credit to the private sector. The good news is we can see month on month, now going into the 5th month, private sector credit growth is picking up. So that's good news, but very clearly banks are reluctant on term lending at this point. We're supporting short term, supporting anything with some underlying trade, underlying supporting documents. Gone are the days you give 5 years working capital loans and large TODs and things like that. So banks are careful looking at how the economy is stabilizing with the NPL scenarios. I think the macro stability is critical, we are achieving it. Fiscal stability is critical, some work to be done. Political stability is also critical because that leads to policy consistency. We have got into situations where we lend to projects and suddenly we realize the tax concession is gone, or the trade concession is gone, or the land promise was gone. The hub concept is a classic one. There are investors who got into the hub business and they realized that it's not a hub. So banks are very careful in terms of understanding the policy consistency before we go into long-term loans. Having said that, there'll be enough appetite from export credit agencies to look at large projects for term funding. So the large ones will have to be supported by something like that. Cautiously optimistic about the credit growth. In month on month is growing. So we also don't want to grow at double digit when the economy is growing at 3% next year. So we have to be very careful. Again, we might end up in an NPL scenario. Specifically about this new policy around the large exposures, this will have a drastic impact. Again, that's a bad news. Good news is we are given 3 years to remediate the portfolio. So 25% of tier 1 means even for larger banks, the SBL will come down by, some banks it will come down by 40%, 35-40%, maybe as an average, maybe 30%, SBL will come down. Very clearly, banks will have to participate and, it's basically driving a behavior of reducing concentration. We completely understand that because 6 banks in the country hold 6 trillion, we got a 10 trillion asset base. So balance 26 banks hold 4 trillion assets. So that there itself is a problem. Looking at the regional view, India is 25% of tier 1, Bangladesh is tier 1, 25% of tier 1. Thailand is slightly different. So we are an outlier in the region also, so we had to fix at some point. The question is, should we fix it now? Because we're just getting into a recovery, trying to recover some of these industries, and banks should have the bandwidth to, operate. And getting capital next year will be very challenging because still the Fed is hovering around 4%, 5%, whatever. We don't see the easing happening until second half, so capital is moving to the West. So we don't see attracting large capital flows to the Sri Lankan banking sector immediately in the first half. So there are those challenges also there. So timing-wise, I don't know if it's the right thing to do. Directionally, it's definitely the right thing to do. Banks will also have to now learn to share and share some of these large exposures. There'll be more syndicates in future, and also this will push smaller banks for mergers, etc. So that also we can see through this guideline what the policymakers are trying to achieve. Very clearly reducing concentration.
What did the regulators say? Because there was a huge issue with regulatory neutrality when it came to the state banks. Because if I remember, Bank of Ceylon and People's Bank had each lent about $1 billion to CPC, which was like more than 100% of their capital. Are they going to impose that to the state banks also?
Yes, so this will be for everyone. But there are some exclusions. So rupee lending to the government is excluded from SBL, if I'm not mistaken. local currency is excluded.
Right.
So there are some exclusions. We also lobby to exclude the nostro balances, because when you get large flows, you have to park it somewhere. Also, we are lobbying to exclude, if you are a guarantee from a AAA bank from outside, just to exclude that as well, because it doesn't make sense to include that in the SBL calculation. Global banks might use the global capital pools and book some of these big assets in Singapore and other places. Some of the local banks will not have that option. So therefore, you have to be very careful in terms of how we are looking at it. I think each bank has done some work. We've gone back to the regulators individually. SLB is also writing to the regulators separately in terms of the industry concerns. We have to get there, no doubt. Timing is the concern we have.
Just to follow up with you, ST, on what Bingu said about lending to the government. Now, previously, you all were fairly generous about treasury guarantees to SOEs. Are you going to be far more judicious about giving these treasury guarantees?
No, in fact, you're very right. In fact, we are going to basically tighten. We are basically going to revise the laws, to basically reduce the treasury guarantee level that could be granted by the government. So that will come with the planned public financial management bill.
Coming back to the question that I said, because there's a lot of, from the tone of the questions, there is a lot of anger not only here but also on social media about spending of tax dollars. Can you comment about what type of efficiency measures you're implementing and governance measures to ensure that public expenditure is optimal? And also the question about a very aggressive inland revenue and taxpayer rights for taxpayers.
I think I also fully agree with the question, because if you are basically taxing, if you compare the other countries, you should ensure that these tax monies are spent efficiently, effectively, and also transparently. There's no doubt about it. But at the same time, my experience in the Ministry of Finance last maybe 18, 19 months, we have tried our best to basically, ensure these sort of, requirements. But many of the issues that we at the Ministry of Finance are facing is legacy issues. For example, I have told this in the past as well, because very significant amount of revenue that we are getting goes to the payment of the salaries, pensions, welfare payments, and also interest payments. If you take the interest payments alone, it's about 72% of the government revenue. So this is the complex structural situation of the government budget. So it's very difficult to change this overnight. While trying to ensure the efficient use of this whatever the rupees, we have to ensure that there's a legal framework as well to ensure this efficient usage of money. If you see the planned legislation, as I mentioned earlier, this public financial management bill would be the sort of overarching bill that we are going to come up with a legal framework to ensure that the monies earned by the government as taxation as well as borrowing, because not only taxing, government is borrowing as well. All these monies are used effectively and efficiently, and fiscal discipline will be maintained, and stricter sort of controls and oversight would be there in terms of implementing fiscal operation. To me, I have repeated this, because it is the fiscal indiscipline in this country that we have brought into this situation. So at least now we have to take this as a lesson to basically ensure that fiscal stability and fiscal discipline is maintained in this country. But there are a lot of legacy issues. We are trying our best to address these issues through day-to-day operations, through circulars, through basic instructions, and at the same time through legal frameworks. And also you would have seen that the Parliament also has now sort of strengthened the oversight sort of operations, and there are at least 2 new committees, Ways and Means Committee and some other committee, to basically look into this sort of very close to have a very close eye on the first on the revenue generation and also the expenditure side, to basically remove these loopholes. And at the same time, it's important that you improve your digitalization efforts as well, basically to improve the efficient usage of the public funds. One is the integrated treasury management information system. In fact, this has been there in the treasury for last maybe 7-8 years, but we have now sort of expedited the implementation and also completion of this ITMI system within the treasury and linking the other line ministries. In fact, it is one of the commitments under the IMF program, and we are sort of committed to link these institutions through this system so that we will have a better control, better sort of efficient management in terms of expenditure management. And at the same time, these e-procurement systems that we are basically talking about. And also last year, His Excellency the President appointed 10 committees to 10 large line ministries to basically introduce the zero budgeting sort of concept. In fact, it's very important that we got about 7 reports out of these 10 committees. In fact, we have published that. Those are available in the Ministry of Finance website. You can go through that. Idea is to basically ensure that there won't be any sort of waste sort of expenditure and unnecessary expenditures going forward. And at the same time, some other sort of actions that will be taken to downsize particularly the size of the government, which has been trying in the past, but now the government has very seriously looked at this as well. But it can't be done overnight. You can't send a public servant overnight home. There will be a lot of issues. But that's why, just to give one example, this people, I remember last time when the budget was presented, there were a lot of comments about the size of the military in this country. You would have seen that in the last budget there was a plan to basically right-size the military. There's a Defense 2030 program, and numbers has also in the public domain. You could see that, and that would be one area. And then at the same time, we have come up with this 5-year no-pay leave system, where if someone is basically willing to go with under no pay, they can go abroad and work for 5 years. And at the same time, there will be a lot of strict controls on the recruitments, new recruitments, I should say, into the government. So all these are sort of broader sort of actions that we are taking to ensure that the hard-earned money, basically hard-paid money, in fact, by taxpayers, would be effectively utilized. And there will be, and at the same time, this will be combined with anti-corruption and governance sort of measures that Faris talked previously. And with these sort of things, the corruption vulnerability and also the perceived corruption would be minimized in the government, the machinery. So, which is also one area where the IMF has so identified as a sort of macro-critical factor. If you are to basically go forward and achieve the growth and other objectives. One final comment I want to make here is that by listening to these sort of discussions, you would see the complexity of the issues that we are basically managing as the Ministry of Finance, as the government, as central bank. Because on one hand, the macro IMF program is going on one hand, the restructuring is going on, ADB is supporting, World Bank is supporting, AIIB and IFC, everyone is sort of involved, and there's a bilateral support as well. It's a sort of, broader sort of, effort that we are making to basically come out of this crisis, strongly come out of this crisis, and to basically at least to try to prevent the recurring of this sort of crisis going forward, which is very important, because this is, to me, this is our country. We don't have any other country, so it is us. Everyone will have to get together and to basically get involved in these processes and get involved in this whatever the policies that we are implementing, and your support, your contribution would also be very important, and particularly the private sector will have a big role to play when you are trying to implement all these policies. So that's a broader message that I want to keep with you, and thank you very much, Mustafa.
Thank you, ST. We are out of time, but I wanted to say that certainly you have a thankless job. It's extremely difficult, and you, along with the governor, have navigated us thus far through this crisis. The only request is, just as much as you were passionate just now and how open you are with the information, you need to do this once a quarter. Because if not, you're allowing other forces to hijack the message, basically, which is a national trait in Sri Lanka. So thank you for all the other panelists, Faris joining us virtually, Taka and Bingu. And I hand over to the moderator.